hello and welcome to this very special edition of Your Trades. We're calling it the hunt for value, considering the correction that has been in the market since the currency demonetization. 5% vicious fall off coming in the Nifty. Of course, you can take cognizance the fact that Friday, start of the new series, those adjustments took us all the way back to 8100, but I don't quite think that's the real picture. So what do you do in a scenario when small caps have taken a leap down of about almost 7%? Good time as any to start drawing up that list, start hunting for value names and chalking up a plan ready to fire ahead in the days to come.
Yeah, I mean, and again, the idea of this show is not to say that this is the bottom and if you buy here, you will not lose money. But the idea of the show is to say that because the correction has been so sharp and in quality names as well, maybe cherry pick, put some part of your money into the markets right now. If the markets fall further, probably invest more, because who can call the bottom? But this is as good a price level as we see in an otherwise bull market.
We'll talk about why right now is there a case for actually drawing up that list and talking about value hunts and all. And, you know, like Neeraj pointed out, the correction has been quite severe in not just the broader markets, the more liquid names, sectors which are hard hit from the currency demonetization, real estate, etc., what have you, or the consumption theme. But some of the quality names as well have fallen quite a fair bit. And of course, the fallout of the currency demonetization and the run-up to the Fed election, the Fed decision as well to hike interest rates, that's escalated the dollar index and thereby impacting the currency weakness as well. So IT definitely has been one pocket which has actually stood out amidst all this chaos. So go across to Ajay and find out why now is the case strongest for value hunting, Ajay.
Well, you are talking about the factors at play, and if we only look at the benchmark indices, they actually do not show the clear picture. They are down just about 5-6% from the demonetization announcement. But if you look at the broader markets, look at the mid-cap index or the small-cap index, only at the index level, 12-13% fall in the mid-cap, 16-17% fall in some of the largest components, 8% and 7% in the main benchmarks. There's definitely serious amount of damage which has actually happened. Not only that, if you were to look at some of the days in the last couple of last particular week, you would see that the delivery pattern shows that there has been some amount of accumulation which has started. In fact, DIS up till now has matched all the selling which has come from the FIS side. Not only that, from the HNI community, which is a clear indicator of how the momentum on the screen is and how the sentiment. For example, Mr. Jhunjhunwala increased their stake in Delta Corp. Other, closely followed HNIs like Purenju and PMS advisors. Again, bulk deal data was evident. A lot of other bulk deal data also shows that mid caps funds are nibbling in. So all these indicators, put together, one gets a sense that from the small cap space, 30-40% erosion in the quality stocks. From the mid cap space, 10-15% on the minimum side, 20-25% on the higher side. So with this price erosion happening at these levels, there is definitely some amount of dipping of feet which has started, and that's why the case to at least start the research or some amount of cherry picking is only getting stronger.
Well, thanks a lot for that, Ajay. Yes, can this short-term blip that has happened, and again I repeat, the idea of this show is not to say that we've reached a bottom or this is the bottom. The bottom may well be 7,700, the bottom may well be 7,500. But in or around these levels, are there stocks that are available as a great value idea for the long term? You get value in volatile times at a price which is mouth-watering. Are we at those levels? Are there stocks available at those levels? That's the question that we pose to three experts. And we cover all the bases of the market. We try and get you short-term small cap ideas, we try and get you large cap ideas, and we try and get you technical recommendations as well with all our experts. So Mayuresh Joshi, fund manager at Angel Broking, joins us right now on the show. There's of course Kunal Bothra as well, who joins in to speak about the technicals, and Abhimanyu Sofat of IIFL joins in as well to speak about his thoughts of where is it that he's finding value. Gentlemen, thanks so much, all three of you, for joining in today. Kunal, firstly the technical parlance. We've had a very strong Friday. Can the momentum continue? And start off with one large cap recommendation that you're making.
Yes, Neeraj. I sense that this was a very good week for the markets because we not just stabilized at 7,900, we not just arrested the fall of almost 4 weeks consecutively. But I think a lot of good spaces sort of emerged in this week. So you had the IT stocks which emerged quite well, and there was good buying interest which you saw throughout this week. So that was one good aspect. The other part, I think on weekly basis as well, there are good chances of a candlestick pattern, which indicated in the previous show as well, on the Nifty as well. So there are good signs which are emerging. Probably if it develops into a short-term uptrend, I think it could probably invite a lot more buying interest coming from a trading perspective. In terms of stocks, the first large cap stock which I'm recommending is ICICI Bank. Now, very interesting chart looking at the last 7 or 8 months of price movement. Even though it's been on a steady uptrend, it's showing a rising channel pattern. The momentum has not been extremely strong, which is where I believe that at current levels of 260, I think the risk reward is extremely strong in terms of going long over here. 240 is the stop loss which I would recommend, and with a time frame of at least 2 to 3 months, one can look out for a target of at least 300 on ICICI Bank.
Well, interesting the way some of these large caps corrected. DLF, I'm not quite sure if we can still qualify that as a large cap after the 21.5% correction that we've seen ever since the currency demonetization announcement. You had an Ambuja fall 17%, Eicher Motors was down 17%, Tata Motors fell 16.5%, M&M, Maruti, HDFC, Asian Paints, consumption, and of course, the rate sensitive, so to speak, they were quite hard hit. Abhimanyu, I want to come to you. Let's discuss the first value buy that you feel that one could look at right now. And Tata Motors DVR, according to you, looks attractive right now.
Yeah, definitely. If you look at the overall Tata Motors, the share of JLR in the overall profit is significantly higher relative to the domestic business. Now, with the demonetization, there's going to be no impact of that. Also, the way pound has depreciated against the dollar, I feel there's quite an upside in the JLR numbers going forward. And considering the discount that DVR has over Tata Motors, the stock is currently available at a PE of just 7, which is quite reasonable. I think so. It's a good stock to own for a long term, for someone to own a global brand at such dirt cheap valuations. Okay, and I think embedded in that answer from Abhimanyu is this probably thought that as well this is a good time to selectively pick and choose large caps. Mayuresh, what's your first large cap idea for the day? I'm presuming that in this turmoil you're finding large caps good enough for the long haul. Let's talk about the first one.
Good evening, Neeraj. Sun Pharma is something that I'm liking from the pharma space. If you largely break down Sun Pharma's performance on the overseas part, the overseas operations have done exceptionally well for Sun Pharma. You might be witnessing some blips happening in terms of the FDA concerns, both on the Halol and the Mohali plant, which received 483 observations as well. But I do not find that disturbing, at least at this point in time, specifically for Mohali. Any resolutions of Halol over the next few weeks or quarters is going to have a significant re-rating in terms of how earnings will pan out, specifically in terms of overseas markets. On the domestic front itself, I think market leadership position with an 8.7% market share. And again, in the con call itself, Sun Pharma has earmarked 1,500 odd crores towards the NLEM liability if it comes through. So largely, again, I think my own sense is that earnings on a consolidated basis should grow at 12-13% over the next 2 years, which should drive earnings growth in excess of 26-27 odd percent. And in my opinion, again, Sun Pharma should report an EPS of close to 35-36 odd rupees for FY18. Strong cash, again 15,000 crores worth on cash on balance sheet, which can be used for organic or inorganic purposes, and that can be value accretive for the company as well. So Sun Pharma is something that I'm liking both from an earnings as well as a value perspective at this point of time.
Okay. Kunal, your second large cap idea for the day is a Tech Mahindra. I'm not surprised that the stock is in good momentum, or why a Tech M? Why not some of the other large cap IT names?
Interesting question, Neeraj, because I think looking at the large cap spaces, I think this is one of the few stocks in the large cap IT which has managed to breach that 200-day mark, 200 moving average mark, and I think that's a very good sign of comfort. Now you look at the last 4 weeks of volume for Tech Mahindra. The average volume for the last 4 or 5 weeks has almost been double or triple the last 1 year average of volumes of Tech Mahindra. That goes to show stock was consolidating at 400, 420, so there are good enough price supports which got established there. It got coupled up with very good volumes on the longer term time frame as well. And now the stock has recovered almost 25% from its lows, and now hit back its 20 moving average. So these are very classic signs of a trend reversal on a longer term basis. And looking at the IT pack, the rupee depreciation, I believe that Tech Mahindra could probably be one of the few stocks on the IT space which can continue its momentum. So going ahead with a buy on Tech Mahindra, have a medium term target of 550, stop us at 450.
Abhimanyu, to you, PFC is an attractive one. How does that stand to benefit from currency demonetization?
So if you look at it, the first half, the disbursements have gone up steadily. Sanction have gone up by more than 60%. Stock is currently trading less than one-time book value on trailing numbers, which looks very attractive. FY18 is trading at 0.5 price to book. If you talk about demonetization, clearly what one is seeing is that a lot of players are, clearing their dues to the SEBs. As a result of that, a lot of SEBs are likely to have more money, and in addition to that, with the liquidity back in the system because of increased CASA and all, I think so players like PFC are going to benefit a lot. And we are liking right now more of the B2B guys, clearly because B2C one doesn't have an idea that when the problem will get solved. So looking at the valuation as well as business prospect, it is a safer bet to get into stocks like PFC right now.
Mayuresh, what's the second stock on your radar?
Power grid is something that I'll continue to like, and in continuation with Abhimanyu's theme, I think with increased expectations of infrastructure spending, Power grid will be a key beneficiary in terms of the 12th five-year plan. So largely I think the capitalization target of 30,000 crores for FY17, the capex target for 22,550 odd crores should be achieved for Power grid. The numbers have been exceptionally good for this quarter. The transmission revenues up 26%, the telecom consultancy revenues up significantly as well by 60 and 24% as well. So largely again, I think if you look at the entire story, I think demonetization hardly has any effect in terms of the dynamics of how power utility companies work, Power grid specifically in this case. And largely I think the management expects the capitalization to capex ratio to be above 1 for FY17 and 18. Again, in terms of CWIP, it stands at around 46,000 odd crores. The regulated ROE at 15.5% on the capitalized asset looks extremely healthy, and it's going to be a key beneficiary of the capitalization program. Again, from a price to book perspective, deals around 1.6 times FY18, which is not too expensive considering the earnings growth that the company can deliver. So Power grid is something that I'll remain optimistic about as well from the large cap space.
Okay, quite a few ideas from large caps coming in there. Let's take a quick break. Haven't done that in a while. When we come back to talk about the more battered ones, the small and the mid caps, and what's looking like a value buy from within those spaces.
Alright, back with your trades, the hunt for value, and that's what we're planning to do over the next 10 minutes as well. We've given you some value recommendations in the large cap space from our experts. Now let's get you value recommendations in the mid cap space and the small cap space. And Abhimanyu, let's start off with you. So one of the stocks that we like is KEC International, again on the same theme that demonetization is not going to have any impact. The order book of the company is quite strong at more than 10,500 crores. On the valuation front also, stock is quite reasonable right now. We feel the power space is one particular segment where one would see a lot of activity in next 1 year. And clearly players like KEC are going to benefit with other players like Jyoti having issues. I think so one can buy stocks like KEC right now.
Okay, since Abhimanyu started with the list of small caps, Kunal, to you then. And ACE, Action Construction, is something on your radar. Why is that?
Yes, Aisha, I think this is one of the few stocks which has been showing some good monthly chart trends. Now, in the last 3 or 4 months, when the stock had broken out of a consolidation, it managed to correct once again, show that good signs of retracement, and apparently that retracement stopped at that longer term moving average, which I believe is a very crucial indicator from for anyone who's looking at medium term or longer term trades. So I believe with the momentum back into the stock, The longer term chart outlook extremely strong. I think the stock should probably be good to go for another 10 to 15% from current levels. So recommending a buy with a target of 55 on ACE.
Your loan ranging small cap idea, Mayuresh, is Mirza International. Why this one?
So again, Neeraj, I think if you look at the components, the branded portions should do reasonably better over the next 2 years. 24% growth is what we've pegged, close to 364 odd crores. Again, in terms of its reach, the distribution outlay is around 1,000 odd stores, 120 exclusive brand retail outlets, which the management expects to increase to 200 over the next 2 to 3 years. Red tape is quite commonly known, and that sells quite well in the Indian domestic market as well. The export market is something where the focus of the company lies, and predominantly I think 2/3 of its revenues does come from the export markets. It has done a small acquisition by the name of Genesis, and this has increased its EPS, ROEs as well as its capacities by 1 million units per annum. From an earnings perspective, my own sense is 11% growth both on the top line and bottom line, with OPMs maintained around 17.5-18%, and the valuation looks extremely attractive at this point of time. So Mirza is something that will continue to remain optimistic about over the long term.
Okay, let's get in some mid caps here as well. And Abhimanyu, you like an RBL bank. Why is that out of the entire list of banks which could benefit from currency demonetization?
So I think so. RBL is quite uniquely positioned. Clearly, with a CASA of 20%, there is a room to grow a lot. Last quarter, CASA had grown by more than 50%. Going forward, I think so earnings are going to grow at more than 30% CAGR. Secondly, the space where RBL is, which is more on the SME side, the working capital loan side, I think so growth is going to be good in next 2 years. He doesn't provide any loans on the infra side. Also with the competition there being with the NBFCs, which will have issue in terms of collection, whereas in case of RBL you will have deposits coming in. I think so it's uniquely positioned on the financial inclusion side also. Already it's among the top 5 players within India in that segment. So overall I think so within the banking space it's quite a safe bet, and I would say that right now it is one of the most safer stock to go for rather than going for any other PSU banking stock.
Okay, so RBL Bank it is from Abhimanyu's end. And Kunal, your mid cap recommendation is Arvind.
Yes, Neeraj, I think it's a very good chart in terms of longer term prospects. The recent uptrend which we've seen from 2016 Jan Feb, when the stock hit low of 240 to 50 odd. I think from there on there has hardly been any meaningful retracement. Now this was one retracement which we'd seen of 100 odd rupees from 425 odd. It apparently took support at a very crucial level, which was I think 320, 325 odd. I believe on the longer term chart prospects, the trend which started from Feb or March 2016 from those 240 levels is extremely strong and intact. Stock has retraced almost 28-30% from its recent highs as well. So all these prospects are extremely strong going forward, and I believe that the stock should probably be one of the few mid-cap names which should probably challenge its previous high pretty soon. So extremely optimistic on the stock. Would look out for a target of at least 400, stop loss 340.
Well, you and Abhimanyu have tallied lists, I guess, because Abhimanyu has an Arvind as well.
Yeah, so definitely, what one sees is that on the branded space, there are very few brands with the scale which Arvind has been able to achieve, and that is one of the reasons why we saw such good valuation Arvind brand was able to get in the deal that they did last month. I think so overall in this particular space, we are going to see marquee brands tying up with players like Arvind going forward. And if you look at valuation also from a branding perspective, this seems to be quite a reasonable stock, and hence we also continue to like Arvind as of now.
Mayuresh, a consensus there or not? What is it that you like as a value buy from within mid caps?
Again, Arvind is a story that I'll continue to like, but again, KNR Constructions is something that I'll still prefer. My own sense is that with increased infrastructure allocation that the government will look to So whether it be power or roads, I think increased order allocation from NHAI and North should continue over the next few quarters. It's already got a very decent order book of close to 4,570 odd crores, split between EPC and irrigation. So EPC is close to 3,900 odd crores, irrigation projects are close to 670 odd crores. It has healthy margins, and our own expectation is margins should get maintained between that 17.5% odd levels. ROEs have expanded significantly, close to 22 odd percent. The debt equity is quite low at 0.15, considering a company in the EPC space has got an extremely healthy balance sheet with net working capital days close to 40 odd days. So again, I think KNR Construction can be a key beneficiary both from a government infrastructure spending perspective as well as from valuations and earnings perspective. It looks extremely attractive from the long term as well.
I gauge. Okay. So KNR Construction from Mayuresh's end. Of course, I think he's a call on Jagran Prakashan as well as a mid-cap idea. So Mayuresh, you want to quickly enumerate that?
So again, I think key beneficiary in terms of advertising spend going up, elections coming up, and though one might see some amount of impact coming through specifically with the demonetization happening from the consumer staples and the FMCG guys, my own sense is that the circulation and advertising revenue should stabilize over the next few quarters. The radio business has been doing extremely well. They just announced an IPO for its Radio City business, which is high margins, high ROEs, and again largely I think the bottom line growth of 12% should get maintained. Again, the stock might get hampered because of ad spends getting hampered from a short-term perspective, but from long-term perspective my own sense is that normalization should happen over the next 2 quarters. So any decline I think becomes a good buying opportunity for long-term investors in Jagran Prakashan.
Okay, gentlemen, all of you, thank you so much for joining in. A small sample of what investors can do if you indeed want to invest in value. This is the Hunt for Value, the Your Trade special, and from Aisha and me and the team that put this show together, thanks so much for watching.